This is our Forex blog for February 27th, 2012. And like most days, we use our currency meter to focus on buying the strongest currencies versus the weakest and selling the weakest versus the strong. On the top, we have the real-time strength or weakness. Strength if it's green, red if it's weakness. This is made up of 5 of our best statistical trend tools we've come up with over the last 6 years. 3 of them measure the direction the dollar, in this case, is moving, and 2 of them measure the intensity of the direction. One is a bar-by-bar intensity, which we give about 35–40% of this weight, and the other one is a little bit longer term, 30 minutes to hour intermediate time frame intensity. So in other words, and we have an 80 level here, which shows 80% of the currencies are going up or down and or combined with some intensity. Anytime it's at or above the 80 level, it shows a trend that's very likely to continue, especially if you see a pattern where you have lots of strength up, and markets don't go one way forever. Sometimes they go up for an hour and a half to 3 or 4 hours. That's the longer the time frame is more rare. Usually an hour or 2 like this, you get a 20 or 30 minute pullback with considerably little momentum. This means that very few of the dollars pairs went down as a percentage, and also they did so with very little intensity. So that trend is very likely to continue. Underneath that, we have the daily trend, weekly trend, and monthly trend, which is made up of 3 different statistical trend tools for each of them, averaged together to give you a more accurate reading. And so the daily, weekly, and monthly trend's down, but the real-time momentum is up. You can see the daily trend shifted up and around here, and for the most part of today, the dollar was strong. If currencies have gone down for days or a week or 2 at a time, you can have the weekly and monthly trend be down, but the real-time trend be up. You always want to focus on the real-time trend, but you can increase your odds when the real-time trend matches the weekly and, of course, the daily. I don't really care about the monthly so much because it can take maybe 2 weeks to change direction. If the dollar's been going down a lot, which it has, it could take 1 to 2.5 weeks of very strong up moves to switch the monthly trend to up. The bigger the down month was before, the longer in more pips it has to go up typically to switch this to up. So I kind of ignore that. So today, what would you trade? First of all, always look to see if you have currencies that line up on all time frames. You can see it around 10:30. The Australian was strong on all time frames, and 11. This one was. The pound was one of the weaker ones at that time, and the weekly trend's down, the monthly trend's down. I don't care if the daily trend is still slightly up, that doesn't matter. So you might have sold the pound Australian or sold the pound New Zealand. We're going to look at some more common pairs that people trade. Most people don't trade the pound Australian, but I just want to show for illustrative purposes. This one started getting weak and the pattern really showed that it was likely to go down right here from 6:30 to 8, extremely weak, and then the counter trend move had very little strength up until 9, and here's 9 o'clock right here. If you were watching that, you might have looked at the exact opposite pattern in the Australian and New Zealand and been watching this pair, and when it broke down through the low, actually been in this trade. You can see, especially with the Australian, it was very strong, had about 30-minute pullback, and it doesn't matter if the market's gone up for 3 or 4 hours. It doesn't matter if there is intense pullback. Just as long as it goes green again, right around 9:50 right here, you're looking to possibly sell it, and that would be, right at this time right here, right on this bar. You had plenty of time to get into this breakout, or you could have even got in a little bit earlier here. Let's just say you got short at 4,800. We'll round down about 20 pips or so. You can see it went down 130 pips, and most of us would have been in this until it went kind of sideways. I would have got out of half my trade. I either use a trailing stop, or when it goes sideways like this, I put my stop right above those highs. Comes down again and goes sideways, you move your stop. Comes down again and goes sideways, you move your stop. And some days like this, currencies just keep going and going. It could go another 50 or 60 pips. You never know. You do want to draw your fibs on this wave right here, and somewhere between the first and second fib target, if this does continue down, is very likely, probably 80%, where it will stop and reverse, and you might as well just get out the fib target. While I have this up here, let's take a look at the pound New Zealand. Same exact pattern. Nice little sideways rectangle pattern. This is one of our, we really have 2 entry methods once we identify a strong or weak currency. One of them is a multi-hour, rectangle pattern, and I prefer at the very minimum 30 minutes. I prefer an hour and a half to 2 hours. So we have an hour to 2 hours and 20 minutes, 2 hours and 30 minutes. Breaks down right here, and boom. And you also have kind of a false breakout right here. Breaks out, comes right back down. And when you get a false breakout, if you really want to be aggressive, you can sell it as soon as it goes below the low right here at 64. Put your stop right here, and watch it. If it comes down to the low and goes sideways and starts to come back up, you get out with a small profit. If it breaks down like this, you hit a home run. Now let's look at some of the other trades today. Obviously, the yen and the dollar were both very strong today. The yen was stronger than the dollar. However, the dollar's daily trend shifted up earlier. The weekly trend was off and on, right on the verge of switching up at 2. So if you wanted to focus on ones with higher odds, higher winning percentage chances, the more time frames that line up, the better. If you wanted to focus with maybe slightly lower odds, maybe in this case, probably 60, 65% likely to work. This one, maybe 50 to 55% just because of how strong the downtrend is over the last week and month. You never know if currency that was that week will have an hour to 5 hours of strength and then explode down again. That happens all the time. So you got to be careful of that. That's why we show the weekly and monthly trend on there, just so that you know what your risk is and what you're dealing with. But that being said, you can still catch a ton of pips trading with the most momentum. And the most momentum today to the upside was the yen. The euro was weak at 3 here, but the daily and weekly and monthly trend is up. The Australian was also weak, and it has a daily and weekly down, and the monthly is just slightly up. So you might have, coming into today, let's scroll back a little bit and watch it before midnight. Right around here at 1, you might have been looking for some Australian, New Zealand sells. And so as you look at this chart right here, this has a lot going for it as a trade. For one, we have our 3-hour trend reversal dot right here, which most of the time, within 5 hours, you're going to get on most currencies, a 30 to 80 pip counter trend move. Also, on top of that, this one's above the hourly. Above the hourly, it's more likely to go up. Below the hourly, it's more likely to go down. This one's just kind of going sideways right here. You also have, at the exact same time as this, here's the previous week's high. It failed to get back above it, so you had a failed breakout. And on top of that, you also have just like the same pattern I showed before, a multi-hour rectangle pattern. And you can see a lot of times rectangle patterns start with a little bit of higher volatility, and then they get tighter. And I prefer that. Any kind of pattern where volatility goes lower and lower and lower, your odds go up. And you can see it finally broke down. You can just use our trailing stop to get out. You would have been out of here at 43, short at 65, 25 pip profit. Pullback trade right here. A lot of weakness on the way down, very, less strength on the way up than weakness. I prefer it when it looks like this on the way up. That's a no-brainer trade. When you have extreme weakness followed by a pullback up move that looks like this, it's probably 75-80% most likely to work, especially if the weekly and monthly trend are down, which in this case it's not, so I'd give that maybe a 70% odds. But nonetheless, you have a pullback trade. You short again right here at 50. Looks like the trailing stop got out here at 20. You made 30 pips on that one. The lower bands, most of the time the market doesn't go underneath that. And if the weekly and monthly trend is up like this, it's rarely going to go below the 1.618 of this move. You can see it went a few pips underneath there. At 60, it went 10 pips below the 1.618. So if you had got out of your trade here and it kind of went around sideways here, remember 30 minutes to an hour and a half rectangle pattern, you have another one right here. You're short. I'm going to most of the time get out of this trade here at 89 just because it's so far underneath the lower 2.0 white containment band, and the longer term trend is up, so I'm expecting a reversal down here. I'm not going to hold on. But you can see this one went a little bit above the upper band. Most of the time it hits the band and reverses. Let's scroll back and take a look. It doesn't get much above the upper band here. Barely comes up to it here, gets above it and pulls back. That's why we have these bands on here. Notice it just touches it to the pip, almost to the pip. These days it didn't even hit the lower band, it just hit the red band. So don't be greedy. When you see it go more than 15, 20 pips outside the bands, really tighten your stop. Use a range chart or 35 to 50 tick chart and just keep moving your stops down above little sideways rectangle patterns. Same exact weakness was had in the New Zealand, although it didn't really start to show weakness until about 1:30, a little bit later than the Australian. Notice again that this is above the hourly, same kind of pattern here, and you had two big, very high probability reversal patterns on Friday. And so that means it could still go up on Sunday, which it did, but that's the end of the move, and you're very likely to get a big counter trend move. If you miss the breakdown from above to below the hourly right here, a lot of times it will come back up and retest it. If it can't get above the hourly, that is really telling you something. There's sellers right there at the hourly. As soon as it goes back, starts to go back down, you're short at 61. Looks like the trailing stop got you out here at 35. And again, if you decide to sell this little hour sideways rectangle pattern right here, most of the time it's not going to go too much below the 1.618. You can see at 03 all the way down to 94. It went 11 pips underneath there, and quickly within 10 minutes it shot back up. So don't be greedy when it does go underneath the lower bands, especially if there's major support there. There's a monthly pivot level here. Our trading zones is showing you that this is a very high probability. The next trading zone's down here, which is almost to the pip where it found the end of the move. And with the weekly trend that was up most of today and the monthly trend that's up, if you want to do quick little counter trend moves down here and catch 15, 20 pips the first time, the second one in at 91, the trailing stop got you out here at 42. That's pretty phenomenal 50 pip counter trend trade. If the monthly trend is very strong up like this and the weekly trend is really not that weak, or it was up most of the day, you really can look for buys underneath the lower band. You might have bought right here, made 10, 15 pips, went sideways for a while. I might have went long right here, maybe lost 5 pips, bought this pullback here, made 5 pips. And again, most of the time, you got this nice little small wave right here. It's not going to go below the 1.618. Plus, here's the previous low. If it does go underneath the previous low and immediately comes back up within usually 30 minutes or 40 minutes, very high probability place to go long right here at 95 if you didn't want to more aggressively buy it at 91.